And again, as I mentioned, we build ecosystems, and we've been investing as Intel Capital, along with Intel Corporation, into many different devices, different innovation curves, all the way from PCs, now data centers, ultrabook tablets, and very other innovative areas like TVs and cars. We are truly global. Offices, again, I'm not sure if it's visible, but darker blue is where our offices are, and lighter blue is where we had invested. So we pretty much cover all around the world and love to invest in many other gray areas, and very excited about the opportunities around there. We announced specific funds into regions. We have funds around different ecosystems, connected cars, Ultrabook, AppHub. AppHub is our application platform where we invest in early stage, later stage companies innovating in the application world, not HTML web, but on the application side. Just for the numbers, we have a lot of numbers here. So we've been around for a while, and the scale that we got to is very impressive. I mean, we've done 150 deals last year. I mean, 150 deals, just to put that into a context, is 3 deals a week. And out of that 150 deals, majority of that was around 85 plus was follow-on rounds, meaning we continue to support the companies that we invested before, which is very critical. Miles mentioned that. The continuity of capital is very important, because when you raise $1 million, couple $100,000 round, it's just the beginning. If you want to build a multi-$100 million company, you will need a couple other stages of funding to build your organization, to scale up your business. And so we've been doing that for our portfolio companies. The bigger portion of the money is going outside of US. And one other thing I want to highlight here is we have a great vantage point in terms of the exit markets. We had 7 IPOs last year. 7 of our portfolio companies IPO'd in different markets around the world. We have 28 acquisitions, so that gives us a great experience in terms of what are the trends and the exit terms. How do you negotiate? I mean, the likelihood of an entrepreneur negotiating with a large corporation like Oracle, Salesforce to sell their company is probably once in their lifetime, most of the cases. So the negotiation could be very tricky, and you could leave a lot of value around the table. So we've been doing that for a while. I mean, again, last year we had around 35 different exits, and 28 of them was M&A. And during those M&A discussions, obviously there are a lot of nuances that you need to be careful about negotiating with these large corporations who've been doing that for a while, so they know how to take value off your hand. So you need to be very careful. And I mean, just that, if I'm an entrepreneur, just that will be enough for me to work with a corporation who has enormous amount of experience in that area. We've been, again, last year we had around 35 exits. These are all from all around the world. AVG is one of our IPOs. It's a security company. It IPO'd in New York Stock Exchange. We have a bunch of different exits from Gaikai Gaming to Zapato, which is a shoe retailer, to e-tailer, to Mall CZ, which is iMall. It's the Amazon of Central Eastern Europe. We sold it to Naspers last year. And so many other segments, software, mobile. So that kind of vantage point is very valuable. And as again, being a person who went through this couple of times, every negotiation in the exit situation, exit negotiations are really important, and you really can leave a lot of value around the table. So you need to watch out for that.